All right. Hey, everyone. Hold on a second. Just getting into the picture here. Let me just adjust my microphone. Thanks for joining me. Hold on a second. Okay. All right. So, hey, Mark P. Markets here. Mark Principato. Thanks for joining me for another analysis stream. I'm not simulcasting today on TradingView like I normally do on a Monday because I couldn't even connect to their server. So I'm not sure what's going on there. You know how technology goes. I'm going to have to figure that out. Perhaps I'll make up for it sometime this week. But today I am not simulcasting, which means for you, I'm going to be able to answer more questions. Okay, so with that being said, you know what we're going to get into here. Let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, cool. So you got my chart on there. You know, the first thing we're going to go over is the economic calendar. Okay, so you know, it doesn't matter which one you use. I'm only interested in what economic events we have for this week that can move the market. Now, yeah, Jesse, I know we're going to talk about some of this craziness here. Here we go. All right, so let me just say hello to everyone real quick. Tillin, hey, welcome. Elizabeth, good to see you. Jesse, all right, cool. So like I said, we're going to have a small crowd today because I'm just on one channel. And I'll be able to answer your questions. Hey, Shay Shank, good to see you. Hold on, let me just adjust this thing here a little bit more so it's a little closer. All right, there we go. All right, so let's get this thing started. So I want to start with the economic calendar. Again, you can check the one on TradingView. The thing is, you want to make sure you understand the scheduled events in case you are in something that can be dramatically affected by such a thing. So real quick, we have, let's see, I'm gonna start with tonight, 9 p.m., China non-manufacturing PMI. Usually Chinese numbers don't have a big effect. I mean, from what I can tell in recent times. Tomorrow we have consumer price index for the euro, and that's usually around, those numbers often come out either 4 a.m. Eastern time or 10 a.m. Eastern time. I don't have the timestamp here, but those, again, those aren't big numbers anyway. Also tomorrow we have for the Canadian gross domestic product annualized. Again, these are not big numbers. These are not big market moving numbers. We have for Australia their GDP as well. Okay, no big deal. Now on Wednesday, we have German retail sales. That something like that could move the euro somewhat, but again, these aren't big numbers. Now, for the U.S., we have ADP employment change and the ISM manufacturing PMI. The ADP number could have an effect because it's often some sort of hint as to how NFP may come out. It sort of sets up an expectation. So you want to be aware of that number. I believe that number comes out. It's either 8:30 or 10 a.m. Eastern time. Just make sure you check your calendar. But a lot of times these numbers are non-events. The whole point of being aware of them is so that you don't get caught in something, okay? It's not to trade them. Also on Wednesday, we have trade balance for Australia. I believe that comes out in the evening, probably 7 p.m. or 8 p.m. Eastern time. On Friday, we have for Swiss, all right, for Switzerland, GDP, no big deal. We have European retail sales, and at 8:30, the first Friday of every month, we have non-farm payrolls, NFP. That's the big number for this week, okay? First Friday of every month. It is one of the most important scheduled economic events next to an FOMC meeting or an interest rate decision, okay? So how that information is helpful is if you're in a Forex pair or perhaps even a stock that can be dramatically affected by that one way or the other, you just want to be prepared, perhaps adjust for a range expansion, especially if you're against the trend or something like that. If you're in a counter trend trade, you have to be very careful because you can get a very large range a day and it could be higher or lower. There's no sense in trying to use logic to try to anticipate how that report will affect the market. It's useless, right? The information has to come out and the market needs to process it and react. So you just want to be prepared for a range expansion. Doesn't mean we'll get one, you know, one way or the other. Doesn't mean we'll get one. You just want to be prepared. All right, so that's the economic calendar for the week. Let's get into Bitcoin. I want to talk about Bitcoin, gold, and the Nasdaq. I see Jesse's prepared for my rant. That means I must be getting predictable. I'm gonna have to put on more of a poker face with those rants so that you don't expect them. Okay. Anyway, so let's start with Bitcoin first. Now look, and I see Elizabeth here is talking about Bitcoin and ETH are testing all of our patience. Remind us how to be patient again, and what would you be looking for? Okay, so those are some good questions. I'm definitely going to get to those because look, Bitcoin, and Tillin puts here that volume seems to be a lot lower than the year before. Those are all good observations. And by the way, thanks for sharing where you're from. I can't even pronounce that word right there, Tillin. I'm sorry. But thanks for sharing that. If you want to share what country you're from, I usually put that out for TradingView because I get such a variety of places. But if you want to share what city or what country you're from, that's always a fun thing to do. I'm broadcasting from the greater New York City area, northern New Jersey, and Jesse knows where that is because he's not too far from here. Okay, anyway, so let's talk about this Bitcoin situation. And by the way, whatever I say for Bitcoin is going to apply to most of the altcoins, okay? Maybe not all of them. So let's get into this. And by the way, I wrote an article on TradingView yesterday, which I addressed this as well. So if you haven't read that, you should always check that out. This box that I drew here, it's a resistance zone. So what we're seeing right now is a consolidation developing inside of a resistance zone. So as far as a swing trade goes, it's a really bad area to be putting on new risk. Now, what are some of the scenarios that we can see as the week unfolds? Again, we're here to look at price action and gather the clues that price action provides to see what our reward risk is basically for the coming week, okay? Now, some potential situations that we can have with Bitcoin are you may get the breakout, the consolidation breakout. Now, it's a tough spot. And so as far as patience, you have to decide, how much pain you're willing to take or what kind of risk you're looking at here. If you're looking for the breakout idea, because I know a lot of people are long from this area, it's a bad place to put on new swing trades because the risk is very high. If this thing breaks, so let's talk about the two scenarios. Either you're going to break higher, which would be the breakout scenario, and it would require some kind of very positive catalyst to get that thing going. Perhaps some kind of news event that no one was expecting. You know how that goes. If you get the break, all right, it should look like this. It should be vertical. I mean, you should see a candle that looks like that. And in this low volume environment, Bitcoin is being affected by the low volume. We're seeing low volume across the board, right? Nasdaq, S&P, all that other stuff. That's why they're at such ridiculous levels. All right, so we'll get to that here in a moment. But when you see the breakout on Bitcoin, it needs to be strong. It needs to be basically a vertical candle, and that candle needs to close strong. So that's like, and I wrote in my article, it's a viable strategy. All right, if you're going for the breakout, that's not one for me. I don't take those type of trades. But if it can break out of 50K, you're looking at the low 50s, 52, 53K, perhaps 55. The next real resistance or relevant resistance on this time frame is basically the 60K area. If it can clear, okay, if it can clear this resistance. The fact that it's consolidating within the resistance is a sign of strength. It can be interpreted that way because often resistance or support get rejected quickly, right? Especially resistance. This is not being rejected quickly, meaning you should see a break of support and this thing should be much lower pretty quickly, all right? Like back here, for example. This is a that's a swift rejection. It was up there for one candle and it went back to the support, right? We're not seeing that up here. Not yet anyway. So that's what you have to look at. So you have one possibility of it goes for the breakout. And if you take the breakout and it fakes out on you, that's where the skill or experience comes in. You need to be prepared for that scenario and be prepared to take your small loss or your small profit because you don't want to get caught. If it's a swing trade, you don't want to get caught in a fake out because you have to understand what goes on from an order flow perspective. If you get the fake out, a lot of people are long at that point because everyone bought the breakout, right? And now everyone is stuck in it. And when they all bang it out, most likely it will break the support. You don't want to be part of that if you're going for the swing trade. If it's a day trade that you're getting involved in, that's a different story. You should not be exposed to this magnitude of risk to begin with because it's a day trade. If you don't know what I'm talking about when I talk about a day trade or a swing trade, then you should not day trade, okay? It's very hard. I mean, even for professionals, it's a very hard game. So if you're new, you don't have much of a chance to make money consistently day trading these things because of those type of situations and the magnitude of risk. Now, so you have that situation. If it breaks the support instead, which again, at this point, anything can happen. Some people can argue, oh, look, bullish pin bar right now, right? Bullish pin bar, we haven't closed yet, but if that closes looking like this, that's bullish. If it takes out the high of this pin bar, that could be the beginning of the breakout, right? So yeah, you have all that. But what if the next candle tries to go, like I said, tries to go, and then it turns red and instead takes out the support? Well, that would be a sell signal. Something you don't want to see if you're long. If you have a swing trade on, you should be taking your loss there if you got in at a bad price. So if you bought somewhere, 48, 49, 50, you bought somewhere in this range, then you should be taking the loss there. Otherwise, you're opening up yourself to much greater risk. And the support right now is 44. Okay, the 44, this whole area, 41 to 44, that area is basically the supports you're looking at from a swing trade perspective. All right, so if Bitcoin can pull back over the next few days instead of going higher, if it can pull back instead, I'm interested in 44K, 41K. If it wants to break lower than that, we're looking at like 37, possibly 35. I don't think we'll see 35 in a few days. I think that's unrealistic at this point, especially with the kind of volume and the kind of movements we're getting in this market right now. It would be hard to believe unless there's a very serious catalyst. So that's my Bitcoin outlook. Now, I understand people want predictions. They want absolute, oh, Bitcoin's going to 65K by next Wednesday, right? That's what everyone wants to hear. If you look at all the YouTube titles, I mean, they say things like that. Well, no one knows where these things are going, all right? So that's what you need to first embrace and understand. Markets are highly random. You must embrace that. If you don't, you're always going to get caught in logic and you're always going to lose money because markets are not logical. They're irrational. So that's why I don't make predictions. We're looking at scenarios. So it can break out, it can break lower. The skill of the trader is to basically manage risk depending on what scenario they want to play. Taking the short side, something we don't do, but I mean, there is, especially on the day trade perspective, yeah, you can make some money on the short side if you're going to play that break, that support break, but it's a hard game, okay? You're better off working with this general bullish structure and looking for the breakout. I mean, technically, that is what you should be doing. So as far as Ethereum and patience, Elizabeth, there's really not much to do here. Bitcoin needs to make a decisive move, and it either needs to clear that support or clear that resistance. And based on the structure, probability favors a break of the resistance, but that doesn't guarantee we'll get it. All right, does that make sense? So I hope that answers your question there. So basically that goes for Ethereum as well. We'll take a look at an Ethereum chart in a moment. Let me just jump over to the Nasdaq real quick, because I get on these rants. And I'll be talking about this stuff for 30 minutes before I get to your questions. Okay, cool. So let's go to NSX USD. All right, NSX USD. Let's see. Okay, hold on a second here. All right. So this is, I mean, Jesse, talk about ridiculous mode, right? I mean, this is ridiculous. Look at this thing. So this thing is up today 186 points. It's at 15,616, right? All-time highs. Again, look at this chart. So this market refuses to pull back for whatever reason. It shrugs off whatever kind of news comes out, shrugs it off. I mean, this thing is vertical. It looks like Cardano. So what do you do here? Well, this is great, again, if you're day trading stocks. Swing trade is very tough, and I've been saying that for weeks. This is a low volume environment, and all we're getting are these vertical moves, okay? This chart, by the way, if you look at Google, looks very similar to Google. Look at Google. What's up with that? Is my Seinfeld impression. I mean, is Google the Nasdaq or is Nasdaq Google? I don't know, but look at that, right? Let's take a look at Facebook. Oh, Facebook, all-time highs. Great. What else do we have? Apple, AAPL, right? Apple, all-time highs, Apple. So that's why the Nasdaq is going crazy like that. So are these things like a great place to buy? you're buying a potential, it's a possible breakout here. Yes, it's a breakout. Looks like it's going to close strong. I mean, we only have what, 40 minutes or yeah, about 40 minutes before the close. So it looks like they're going to close strong. But do you think that this is a sustainable rally, or is this just low volume nonsense? I mean, I hate to have opinions because we can't argue the market is strong. Okay, there's no question it's strong. But all you can do in this is look for day trades that maybe give you buy signals. If you're going to look for swing trades in some stocks, like look, BMBL, right? We called this one as trade of the week a couple of weeks ago. I mean, this thing's doing okay now. Right? It's minus a couple of cents today. It's at 55.17. We called it on the breakout, and we were anticipating, or looking for this thing to at least perform in a positive way if the Nasdaq and S&P carried through with their rally, which is what they're doing. This thing is not doing that great considering where the S&P and Nasdaq are, but you understand the point. So as a swing trader, yeah, they're going to be buy signals in stocks. The key is not to get overexposed. I know I repeat myself a lot. I've been talking about that for a long time, but look where you're buying. Are you, I can understand if we were at a support or something. This is like all-time highs. So, what do you do here? Bad thing to do is to short in front of this because how much higher can it go? That's a very hard game to play as well. There's no sell signal. We had a sell signal a couple of days ago, and someone had asked me about the SQQQ, and I said, well, you have the sell signal, but you're counter trend. I warned against the risk because this is possible, right? Just because we have a sell signal doesn't mean it will follow through. So again, my point with the Nasdaq, as far as price action in the next few days, I mean, this thing with this momentum, it's likely to see slightly higher prices, but I find it hard to believe it will go another 1,000 points. I mean, maybe it will, but at this point, I think the risk of retrace is just too high, and I can't do anything here as far as swing trades go. I would just not do anything. I wouldn't short it. I wouldn't go long, nothing. Wait for a support, right? That's the lesson. And right now, the only support we can argue about here is 15,183. So basically 15,200 is your next support. It's this old resistance area, which you may get a swing trade opportunity there if it puts in some type of reversal there. That's not even a high quality support, okay? But it's a support compared to where it is now. So that's the Nasdaq and basically the outlook for the stocks. Look at the S&P, right? Same deal, same situation. So again, don't fight these markets, don't get in front of them, but at the same time, don't get sucked into the hype that's going to surround this. Like I've been talking about, like I wrote about in my TradingView article, anyone can be a guru in this business. This is a very easy business. The guru business, okay, game of gurus, is a very easy business to get into, especially right now. Markets are random, so often a guru can look good because of the random nature of the market. So what a guru typically is in this business, I just have to point this out, is they're usually a good marketer, okay? And they know that people have a need to make money, so now they're going to appeal to your emotions, and they're going to tell you things to give you hope and to motivate you to basically buy something from them, right? I mean, that's basically what they do. And there's some really good marketers out there. I have to say, I'm definitely not one of them. But yeah, so what I'm saying to you, the message here, when you see markets that look like this, you turn on any news outlet, what are you going to see? Well, today the S&P made all-time highs once again. This market's going up forever. Pullbacks are just obsolete. We don't see pullbacks. Let's talk to an expert about pullbacks. Hey, Mr. Expert, do markets pull back? No, they don't. That's so 10 years ago. There's no such thing as a pullback anymore. Markets just go up. That's it. So just buy everything in sight. Buy more Facebook. So anyway, that's my point. Stay away from this stuff. Wait for a support. You just have to be patient. Don't get sucked into the fear of missing out. There are probably some people out there that will say, this is just the beginning of the bull market. Watch for that comment, right? Anyway, so that's the Nasdaq. Let's take a look at gold real quick. Gold. So gold, like I've been talking about, gold has been tough. People like to get opinionated about gold. Just pay attention to the levels, okay? Forget all the economic blah, blah, blah. Pay attention to the levels. We have a resistance at around 1830 area. So you probably shouldn't be buying up in this area. If anything, you should take something off the table if you're in from a lower price. But like I've been staying away from gold, there were some buy signals in here. If I had taken one of those, then at this point, I would just let this ride at this point, but I'm not in gold. So, I really can't say anything about this after the fact. But, there's really nothing to do here. I wouldn't short gold. So the thing is, if you're not in it and you're interested in gold, wait for a support, right? Just like the Nasdaq, wait for a support. Your support on this thing is right around here, which is, what is that, 1780s, around there. If that gets taken out, you're looking at the range low area, which is around 1750. And gold can get there pretty quickly. I mean, you'll be surprised. You see this candle here. Here, let me just erase those lines. You see this candle over here, this thing. I mean, it went through those prices pretty quickly, and I'm sure caught a lot of people off guard. So, like I said, just wait for a better level. And in this case, since it's consolidating and the broader trend on gold is bullish, this is just still a continuation of the broad wave 4, which is Bitcoin is in the same situation, by the way. Well, when you're in a wave 4 consolidation, right, that's just consolidating a broader bullish trend, the supports are going to be high probability areas. So why not wait for one of those? It may take a week or two, but I think you're better off waiting. Like I said, if you're in gold, this is not a bad area to just reduce some risk. Okay, so it's that simple. So that's gold. No opinions. I don't care what the inflation, but inflation. We're going to be at 5,000 in gold in a year. Inflation, blah, blah. There is no inflation. Whatever, back and forth. I mean, you had Powell the other day saying, oh, we're not going to touch interest rates for a long time. So just rally, market, just keep rallying. We're just going to keep printing money. Whatever they're doing, we may agree with it. We may not agree with it. But when it comes to betting your money or putting money at risk, really focus on the price structure and focus on the levels. That's really what price action is all about. It'll give you a sense of context and how to manage your risk. And really, that's the key thing to this, is managing risk. People look at charts because they're looking for profit potential. Where should I buy? What should I wait for on a chart to buy? And how much money should I make, right? That's what people look at charts for. But really, what you should be using a chart for is to measure risk and say, is this an appropriate area to measure risk from? And what is my probability that this thing will go my way, right? And for how much risk? If you just focus on those words, right? How much risk do I have to take? You'll be better off, because it's going to take your focus away from fearful things. Money is a fearful thing. And the reason why I say that is because it brings on these emotions that are rooted in fear. It's pleasurable to make money, and it's painful to lose money. So because it's painful to lose money, you're going to be afraid to lose money, right? That's just how we are wired. So if you take that focus away and say, well, what is the risk? And focus on the risk. And if the risk is acceptable, meaning, hey, I have no problem losing this money, well, then you're a strong hand, and that's how you make money. So this is really like a 95% mental game, more than anything else. You got all these people out there with charts and all kinds of stuff on their charts and charts and charts and charts and more charts and oscillators and charts. But all of that is usually used as a gimmick to get you to buy into their idea or, something that they're selling. So please just be mindful of that. That's all I'm saying. All right, so those are the things I wanted to touch on. Let me get to your questions now, because again, I don't have TradingView on, so this should be more, we have more of a intimate group here. All right, so let's start here with Tillin. Let me see. Hey, Tillin, guess my 38K orders won't get filled. Being conservative. Okay, but you know what? No problem. Tillin, don't worry. There's nothing to miss out on. Because look, let me just say something about Bitcoin, because he's saying there, he put his orders at 38K and they never got filled. No problem. If Bitcoin breaks out and 38K is never touched, well, you'll most likely have an opportunity to get involved in a continuation pattern. This consolidation can be considered a continuation pattern if it breaks out. So, that's just something to keep in mind. Now, if you don't take that breakout, here's the thing. Don't be afraid of missing anything out, because if it tries to break out, a lot of times you'll get a retest of this old resistance, new support. That will be another opportunity to get involved in some Bitcoin. But since you're at a higher price at that point, maybe it would be a good idea to take less size than you were planning to at 38K, right? That's how you adjust for the elevated risk of the location. Anyway, so thanks for mentioning. And he says there seems to be very little volume in these moves compared. Right. Well, because the environment has changed. I mean, this is just a stimulus hot air environment, in my opinion. That doesn't really mean anything. But, you know, again, don't make judgments on the volume. We can't really see. We know that there's generally lower volume, but doesn't mean that price won't make a dramatic move, right? And the volume these next few months is likely to pick up. Right? Because normally going into Q4, that's when things get back to normal in terms of volume. Because this whole summer has just been nonsensical when it comes to volume and what's been going on. Like if you take a look, let's just go back to, you know, like the Nasdaq real quick, and you take a look at a weekly chart on something like this. I mean, look at this, right? Look at that. It's just been like, you could just buy the Nasdaq and just, you get a couple of maybe 1 or 2 weeks of red, and most of the time it's green. Right? So, I mean, that's the whole summer right there, right? These just going back from this low over here, it's like the whole summer of just green, green, green. So, you know, a lot of that is like low volume, hot air nonsense. Anyway, so that's that. Elizabeth, so she was asking, I answered that earlier about Ethereum and all that stuff. Oh, from Idaho. Okay, cool. So let's go to Ethereum real quick. Hold on. Let me pull up my Ethereum chart here so we could take a look at that. And by the way, for those that are wondering why I'm not on TradingView today, it's because I couldn't connect. All right, so I have to figure out why I couldn't even get on. I couldn't even get like a confirmation that my stream was going over there. All right, so Ethereum is trying to break out. Looks better than Bitcoin. All right, as far as the breakout situation goes, look at that. That's a consolidation breakout. It's trying. It hasn't proven itself yet, but boy, that's a good looking sign. Right? That looks like it's going to go for it. So that, if you're long, this is a good sign. You just want to sit back and see if it breaks out. What you want to watch out for is the failure, okay, or the fake out. So that's what you may get, the fake out over the next candle or two, right, as the week unfolds. So that's what you want to babysit. That's why I tell people, if you look for that breakout trade, be prepared to babysit, because you're going to have to keep an eye on it. If it fails, it can fail quickly, and you need to be decisive as far as your adjustment. What I want you to avoid is getting stuck in hope mode. Like, oh, you get a bearish pin bar, you know, you get like this bearish pin bar that develops over here, and you're like, well, but you know, that doesn't really mean anything. I'm just going to hold on because it always comes back. You need to avoid that type of thinking, okay? If it gives you the bearish pin bar, the effective thing to do would be to exit, and for whatever, a small gain, small loss. And if it turns around again and fakes you out again, meaning the bearish pin bar develops, it doesn't sell off, and then you get a bullish candle again, well, you can get back in. Now, if that occurs a couple of times, you know, you get out, you get back in, you get out, you get back in, and you're kind of churning, that's part of the game when you're dealing with a consolidation, because you don't know which time it's going to go. Okay, and you don't want to get caught. The idea is to avoid getting caught in the fake out, because the problem, like I said with Bitcoin earlier, is the fake out. You get all these people that pile in with you. Okay, and when they're all wrong and you see that tail, that means all these people are going to pile out now. And that type of momentum can cause the support to break. And if Bitcoin does it, this thing is going to do it too. Okay, so that's what you have to watch out for. But at the moment, this thing looks like it's going to break higher. All right, how much higher? There's no way to know. Where's the next resistance on Ethereum? You're looking at like around here somewhere. What is that? 3650? That's the next structural resistance. So that would be a good place to consider profit targets or reducing risk if you're getting in, especially if you're getting in and you're using like this range low over here to define your risk, which is 3050. All right, so does that make sense? I hope that gives you some more perspective. Thank you for asking. So Jesse from Poughkeepsie. Okay, so yeah, I wasn't too harsh on my rant today. Let's see. Let's have a look at SAN. Okay, SAND USD. SAND USD. Let's take a look. Oh, so one of these vertical ones. Okay, looks like the Nasdaq. So when you get these type of things, right? This is a perfect example of what I'm talking about with a bearish pin bar. Look at this. So imagine the people that bought right up here. You definitely don't want to see this after you buy a bearish pin bar. Now, I've seen this quite a few times on a lot of these garbage coins, right? I don't have no idea what they do or anything about them, but I'm going to call them a garbage coin because most likely that's what they are. How much is this thing? It's $1. It's $1. So anyway, treat it like a penny stock. My point is, when you see a bearish pin bar like this, it might go higher over the next few days. If the next candle can close somewhere in that range, give you an inside bar, and possibly break higher. We've seen that in something, in AXS. We've seen that in a few of them, right? If there's a lot of momentum and a lot of hype, this momentum may continue. But why take that risk if you bought the top? So I'm pointing this out because this is what you don't want to see. If you take the breakout in Ethereum or in Bitcoin, this is the type of candle you do not want to see next, okay? Even if it's green, the long tail is a warning. Now, so this chart, let's analyze this chart here a bit. I mean, general structure is bullish, and it broke out of this pretty significant resistance. That's a pretty significant move. But perhaps it's hype, whatever it is. There's a chat room somewhere, a lot of people hyping this thing. I don't know what the story is. It doesn't matter. What matters here is the price action. And secondly, if you want to get long, where would be a sensible place? Well, right here, this old resistance, that's the sensible place because there are likely a lot of shorts that are stuck there, right? Because, people short these things. 84 cents. So if price can give you a pullback to around 84 cents, maybe not exactly, maybe it's, 88 cents or maybe it's 90 cents, whatever. But if it gives you that pullback, I mean, again, this thing's at $1.04 right now, that would be the place to consider it because you'd be buying the pullback into an old support, right? And the general structure is bullish. Supports typically hold in a bullish structure. Now, what you don't want to see in something like this, if you're looking to buy in that scenario that I just outlined, you don't want to see a very steep bearish candle. If you see a steep bearish candle, like something like, look, like this situation right here, so you get those large bearish candles. If you see something like that after these highs, you don't want to jump into that right away, especially if it's at your level. You want it to stabilize a bit. And stability looks like this right here, consolidation. You want to see that. As you can see, it took, a couple of weeks there to stabilize. This is why it's so important to keep an eye on these things on daily charts and not use 5-minute charts or 30-minute charts because they're useless. They're not going to help you see this type of stability or recognize the importance of it, right? Usually people that are stuck with those small time frames are blind to the relevant levels and they're reacting to basically random information. So that would be the area. And like I said, if it gets there slowly, right? If it gets there something like this, I mean, look at this situation back here, just to kind of give you an idea. Pulled back to a support, tried to find support, and then broke. I mean, that's you take this type of risk, right? You take that type of risk when you get into these things, even at a support level, and it broke, right? So this is what you want to see. You want to see something like this develop, and then of course you want to see it break higher after it pulls back. If it breaks lower, that's why you have a stop in place, because you're prepared to take that risk and your risk is defined in advance. Okay, so I hope you found that helpful. Thank you for asking about SAND not being a good follower. Certainly not. It's definitely doing its own thing, and you're going to get these coins that do their own thing. It's just when I say that most coins are following Bitcoin, as you can see, many of them are, but not all of them. So occasionally you get these hype coins or whatever the reason, and they go berserk, and then they get everyone's attention, but you can't chase these. I mean, speaking of AXS, right? I mean, look at how AXS has been. We had a guy point this out back here, right? He was pointing it out back in this area, and it's like 10x'd or more since he's talked about it. Look at this price action, how it's unfolding now. Okay, imagine all the people that are buying into this, thinking it's going to break higher and higher, and consuming all the hype. A lot of the mistakes that you make are rooted in the information that you consume. If you're consuming a lot of free public information, I mean, look, you're all here listening to me do a stream. I'm very experienced, and I'm also conscientious. So I don't want to mislead anyone or steer people the wrong way. I'm focusing on the risk, right? But you have a lot of people out there that are just, AXS, this thing is going to 10x again, and blah, blah, blah. And if you don't have any experience, you're not going to be able to see through that. It's going to appeal to your emotional side, and you're going to buy it up here, right? Like a lot of people have. Look at those long tails. Someone's long from up there. And this thing is not performing now, right? So what does that mean? That means there is a lot of selling activity up here, and this is a really bad place to be long. So I'm bringing this up just as an example because this is a situation you don't want to get caught in. This thing needs to go back to a support, and your first support is here. How many people are going to bang it out here, taking a loss, and really that's the place where you should be looking to buy it, okay, if you were going to get involved in this wild coin. Anyway, so I just wanted to give you that as an example to contrast something like SAND. All right, so thanks for asking about that, Jesse. Let's see what else we got here. So Shay Shank, good to see you. Wow, I'm still catching up on this chat. But I got some time today because I don't have TradingView on. Hey, Monica, good to see you. Ludus, hey, welcome, good to see you. I would like to have your opinion on ICP. Okay, haven't heard from that one in a while. ICP USD, let's see. Oh yeah, no wonder. All right, so this is interesting. Obviously, this was a big hype coin. I remember people talking about this a while back. I mean, look at this thing. Someone got caught in that, okay? Since then, it's been out of play, right? I mean, look at this consolidation. So something like this, in my opinion, you want my opinion, it's good to keep on the radar only because right now it's out of play. So we can zoom up into this information here and you can start arguing about it's you know, you got a higher low, right? This is a higher low over here. So it's starting to get bullish again. Okay, fine. You could make those arguments, but generally speaking, this thing is not really in play. So you have a couple of ways you can go about this. You want to go for the breakout, right? Kind of like that Bitcoin and Ethereum situation. You can go for the breakout. How much risk are you taking in that? The low is 54.5 basically. So if you're going for the breakout and you're buying this thing at, ooh, those highs, what is this high over here? 74. You're looking at about 20 points of risk, okay, inside of this range. So if you buy that breakout, your stop is going to have to go somewhere around the range low. You can't make the mistake of putting the stop at your previous daily candle because that's right in the middle of the range. Chances are you will get stopped out the way this thing is moving. So you need to put it out of the range, which means it's going to be riskier, okay? That's one possibility with ICP. The other thing, or the more conservative thing to do, which is more my style, is you wait for the support to be tested, right? You're in this nice little range here. Great thing to see would be a failed breakout and then test of support. That would be, again, around the 54 area, okay? Or maybe you want to round that to the 50 area, something like that. That area would be a good place to be looking for a long, all right? And if you want to give this thing a try, if it breaks that support, you're looking at this area here, this old minor resistance at around 48, which isn't that much lower. But those are the levels that you're dealing with on something like this. Now, if it would probably make more sense to wait for the conservative side because this thing is not in play, right? And then maybe some news will come out of nowhere, and next thing you know, it breaks higher, and now you get some kind of vertical move. But other than that, you know, don't expect big things out of this thing until you get that big breakout. Again, this is probably a lot of hype and a lot of news-driven things going on with this. These coins are not like high-quality assets, so treat them like penny stocks, right? Which means you shouldn't put a lot of money into them to begin with. I mean, this thing's expensive, right? $68 for what? Whatever it is that they do. Some kind of computer? Some kind of supercomputer nonsense. I don't know. I don't pay attention to any of that stuff because it's all the same. All right. Anyway, so thanks for asking about that one. I hope that helps. Gotham. Hey, from the Bay Area. Welcome. Poly. Okay. Stock. Let's take a look. Poly. It's a stock. All right. Polymetal. Let's take a look. Interesting chart. Look at this elongated consolidation. That looks like a very similar situation to gold, which it's a metal related stock, so I'm not surprised. That is a broad consolidation, or basically like a wave 4, right? And that's what gold is still in, and Bitcoin is in it also. So in that situation, you want to look at the range support and range resistance. Okay, so you have, this is the area, those are the prices that you're dealing with right now. And you're near the range support. Now, don't get confused by these lower highs and lower lows. Yes, that's bearish structure. but you're going into a range support, and this range support is a broad high or low relative to this movement, this bullish movement, right, from a while back. So what do you want to do here? Definitely a good one for the radar for longs. Now, that's our general perspective. Let's zoom in and look at what the current price action is telling us as far as reward risk, right? Especially over the next few days. So you have a lower high right here, right? Part of the bearish structure, no problem. It's trying to hold this support. You have a bullish pin bar that established yesterday. Today, you have an inside bar, right? This thing's going to close here in just a few minutes. So as far as a swing trade long, you have what you have in your favor is a potential double bottom, okay? But the structure is not in your favor yet because you have a series of lower highs and lower lows above you. So taking the long here is still aggressive. That's the way you have to look at that. So you can adjust for that. Perhaps you take smaller size if you want to take that aggressive long. But it might be, if you want to be more conservative, there are two ways you can go about that. See if the support breaks, right, which it's likely to do because, again, you're still dealing with the lower highs and lower lows, and see if you can get back to this support, which is a much more significant level because it dates back a while, okay, months, goes back months, and that's the 1484 level. Okay, so you can either wait for something like that, or this thing starts to change its structure, meaning it takes out this lower high. That needs to be taken out, right? And then that will tell us a structure is changing. I would also be expecting gold or metals to be doing something similar as well. I mean, let's take a look at something like wheat and precious metals. I mean, look, they're all consolidating, right? This is a gold stock. They're consolidating. Similar situation, broader, higher, low. All right, this one's just a lot tighter than poly. So anyway, so those are my observations on something like this. So again, if you want to go for the aggressive long, you can wait for the pin bar high to break or the inside bar high, today's inside bar high to break. That would be your long signal. You can put a stop around 1489, maybe give yourself a little more room. But just keep in mind, chances of getting stopped out are high, right? Until it starts to show a structure change, which is just not there yet. So that's how I would treat something like this, okay? But if you manage to take a long, or you wait for the resistance break and then you buy a pullback, or you buy the resistance breakout, whatever, you have a lot of room to play with here. So the potential, the reward potential is decent in something like this. I mean, you have all this room in here. You're looking at once it breaks, you're looking at testing resistances like up in this area, which is what? That's around 1642. So I like the potential, definitely great potential. It's just you might want to wait for structure to improve slightly more, or you can compensate with smaller size if you want to take the setup that we talked about. So thank you for asking about poly. I hope that helps. Plantronics. Oh, don't tell me I went over the wrong chart for 3 hours. This is Plantronics. This is polymetal. Oh, I think I went over the wrong chart. Plantronics. I got fooled. Sorry. Okay. Anyway, the metals chart, that's interesting. Man, I talked about that for a long time. All right, so here's Plantronics. Look, you have a double bottom, okay? But the thing is, that was a week or two ago. So you can't touch this now, all right? You're in the middle of the range right now. So, I mean, we can make this one quick. Nothing to do. You have an old resistance right here, and you're going right into that, right? Look where price is. It's trying to get into that. I would leave this alone. So for Plantronics, sorry, again, I need to read the chat more. For Plantronics, I would wait for the double bottom, okay? Wait for another test of that low, or at least a higher low, okay? Something like that, which would put you around 3085, something like that, okay? I knew something was weird when I was looking at a price at 14 whatever. I'm like 1450 whatever. That's expensive because obviously it was in another currency. Anyway, all right, so either the higher low or the double bottom. Don't touch it here. You're in the middle of the range. If this thing can give you the higher low or double bottom and it breaks higher, then you're going to use the middle of your range as your potential profit target, or at least your one-to-one reward risk. You want to at least get to that, Okay, and then if you want to try to let some ride, again, you're playing a range here, right? Similar to the other poly. All right, so thanks for asking about that. Let me move on. Julio, J&J. All right, I know that one, J&J. Let's take a look. So I'm surprised to see J&J pulling back like this with the rest of the world going to all-time highs, because the stock markets don't pull back. Pulling back is just so out of style. Anyway, so you have a pullback here, and you're pulling back to an old support area, a previous resistance at 172.70, right? What is this thing right now? 173.67. You're not too far from there. So this is actually an attractive area for a long, right? So good location, general structure is bullish. I mean, that's not hard to see. So what about long here, and what's the risk? Well, you have this, I guess that's an outside bar. It's almost an outside bar. It's not exactly one, but it's a nice bullish close. The concern that I have here with this is, J&J is a market stock, meaning it's highly correlated to the market. S&P is making new all-time highs. So what's up with this pullback, right? That's a red flag. This thing should be making all-time highs also, or doing something a lot more bullish than this. So again, if you're looking for a swing trade on something like this is where you really have to keep an eye on the bigger picture, like the S&P. Because what if that S&P pulls back significantly, which it's overdue and can occur over the next couple of weeks? It's possible, although it doesn't look like it's going to happen, but who knows, right? What is this thing going to do if the S&P pulls back? Even if the S&P pulls back, 100 points or 150 points, which would be a significant move for that thing, like in a 1 or 2 day period. This thing is sitting at a support. So the relative weakness, it's likely to break. So that's what you have to keep an eye on if you take something like this long. Is this generally, if you look at this chart alone, is it a bad idea for a long? No, you're buying a pullback on a strong stock. That makes sense. You just have to watch that index risk. We'll call it index risk, because the S&P is at all-time highs, and this thing should be doing better. So if you take the long, you're looking at what, 172.85 low. What's this low over here? 172. So you could probably round that to 172 even. So you're looking at maybe $1.50 of risk, something like that, and you're hoping to get more than $1.50. This thing can run to 176. It's within range. So, that's more than $1.50. So your reward risk can be greater than 1 to 1 if you can get a move that takes this thing, up into this area, right? That's what you'd want to see. So it's not a bad idea. You just have a lot of index risk or S&P risk in this situation. That's what you need to keep an eye on for something like this. So again, one way to compensate is take a smaller position. Perhaps you normally would buy, for example, you normally buy 100 shares, let's say. So because of that S&P situation, maybe this time you only buy 50 shares. So if it breaks the support because the S&P pulls back, hey, you compensated for that risk, and it's like, all right, so I'm losing, some money on 50 shares. Who cares? That will allow you to ride out the noise a little bit more, or maybe even put a slightly wider stop to see if this thing can get its act together. Okay, so thanks for asking about that. Let me see what else we got here. Okay. So Sean, hey Sean, good to see you. Thanks for stopping by. Starting from the beginning, when do the smart money people come back? Traditionally, okay, good question, Sean, about the smart money people. So he's referring to, the institutional traders and investors and market making firms and all that stuff, because traditionally they all basically take a really long vacation, right? And that's where a lot of the volume comes from. And now, over the next few months, Sean, to answer your question, it's usually around mid-October. Okay, so you would think earlier than that, but just from my experience, things don't really get back to normal as far as type of moves that we're used to until about, sometime maybe second week of October is when things are like, back in that routine. So there is certainly a transition period. Okay, maybe it'll be the first week of October. There's no exact week, but the general period. So as we transition into October, I would be expecting more volume, and we could perhaps rely more on the chart patterns that we see and the signals that we see on these charts, because of that. And usually that volume stays pretty heavy until April, right? That's that period from October to April is often the institutional time. And that's when you really should take things seriously. If you notice, our friend Powell the other day, Powell said that they're going to make some kind of interest rate. They're going to make their decision as far as when they're going to taper, or whatever language they used, at the November FOMC meeting. Why November? Why do we have to wait till November? Why can't they do it in October, right? So I'm just pointing that out because that's typically a very heavy time as far as volume and institutions go, okay? So anyway, thanks for asking. That's a good question. Let me see what else we got. Shayshank, okay, no problem. Well, that was a while ago. Your point is always helpful. Okay, Isaac, I've been learning Fibonacci extensions and retracement, and every video, okay, on how to draw. That's an interesting thing you bring up, Isaac. Use a peak, use a second high after the peak. If you have time, okay. Well, look, the Fibonacci thing, everyone has like their own way of drawing them. This doesn't have to be complicated. You have to understand something. They're just proportions, right? You're measuring proportions. I mean, look, I can show you real quick, right? You're just measuring a low to a high, and you have some levels to work with, okay? 382, 618, and those are basically giving you reference points for supports in this case. It's that simple. So the problem with all these videos, and I spend a lot of time on YouTube watching videos, okay? Watching educational videos, watching analysis videos, because I'm looking at their numbers and I'm looking at how the message that they're conveying to people, because man, a lot of people are doing a lot better than me as far as numbers go. And I'm very curious to see how they do it. Are they lying to people? Which most of them are. A lot of them are. You know, are they exaggerating? You know, what's the message that they're delivering? Is it hope? And I notice a lot of them are appealing to emotions. Anyway, my point is, all these videos, think about this point for a moment. With all this information on YouTube, I mean, you could find a video about anything. You want to find a video about price action. You want to find videos about Elliott wave. You want to find videos about whatever, strategies, free strategies, right? All this information. Why is everyone still having the same problems with making money and all that other stuff with all this free information available? You know why? Because it's all useless. None of this information means anything. Most of these people are not qualified to be teaching what they're teaching, number one. Most of them don't know how to use it exactly themselves. They're just marketing, right? And they're just speaking, they're talking good talk, and they're confusing people. Oh, draw the Fibonacci here, but don't draw it here, but then do this, but then follow the 200 moving average, and then follow that. It all comes to the same outcome, random. There's no advantage to any of it. So, you know, what you have to do as a trader, for one, or a short-term market timer, is you have to get the mental game figured out. And some of these tools can help you with that, but it really needs to be viewed from the perspective of risk, right? I mean, that's what my ebook is all about, as far as the techniques that can help you get there faster, like what information to evaluate, compared to all the garbage that's out there, and in what order to do that in. That's why I put that together. I could talk about it here because I'm not on TradingView. You know, on TradingView, oh, they'll flag me for promoting blah, blah, blah. Anyway, so that's the problem with all these videos. Because you would think, I mean, you know how many free strategies I've come across on YouTube? You know, they're usually like Forex, the only 1 minute Forex trading strategy you'll ever need. No one makes money on a 1 minute Forex chart. Like, don't you know that? Like, it's so hard to make money, and you're going to give beginners a strategy to trade on a 1 minute Forex chart. So anyway, so thanks for mentioning that. As far as like the fibs go, you just need to find a significant low and a significant high. Okay. Usually daily charts, obviously the levels are going to carry more weight than if you're doing it on a 5 minute chart. Anyway, so I'll just leave you with that. Thanks for asking that question. I would like to get into more of that detail, but I have to answer these questions here. Joel, you've said that you don't care about volume, but you keep referring to it. To what extent do you look at volume? All right, so good question, Joel, because yeah, I do use that word volume a lot, but the way I'm referring to it. So when I talk about volume, I'm talking about it from a very general sense, meaning we're in a low volume environment. So I'm not looking at, you see, I don't have the volume histogram up on my chart, right? You don't see volume histograms here or anything like that because it's meaningless, the volume histogram. It's just the volume, the amount of volume. If we're like in a stronger or higher volume environment, like I was answering Sean's question before, like in October, November, blah, 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 then we can assume that the moves will, or the patterns that we get on the charts will be more reliable because there's more volume behind them generally. Okay, but I can't sit there and say, oh, well, this amount of volume went off and that means this. That's where I don't use volume, right? I'm not sitting there measuring amounts of volume. It's just a general sense, right? Either we're in a heavy volume environment, we're in a average volume environment, or in a very light volume environment. Because the summer was generally a very light volume, a lot of the moves don't mean anything. So you can't put a lot of weight behind them, right? And this is where a lot of longer term investors and a lot of these traders that think they have this figured out, that's when they're going to find out when this movement, right, like the Nasdaq, for example, since a lot of this is low volume, there's nothing behind this, right? There's really nothing behind that. So you watch the dramatic, the reactions that you're going to see people, how dramatic they're going to get when you see a large red candle that looks like this, you know, with high volume. Oh, is this, what's going on? Markets don't pull back. But that's often what happens when markets go higher and higher and higher and higher, and there's nothing behind them. It's just hot air. So that's what I mean by volume, all right, without being specific as far as having a volume histogram on my chart and looking at volume numbers, because that doesn't really mean anything, right? That information isn't very helpful. So thanks for asking about that. Let me see. Schwartz, hey, Schwartz from Romania. Thanks for joining. He's my official Romanian representative, Romania, right? All my fans in Romania, all gurus are ranting about it being alt season and to buy alts. Interesting. Well, that's good that you mentioned that, Schwartz. I mean, again, I'm not surprised. Any little green candle on Bitcoin or whatever, they all go nuts because, again, they need traffic. If you ever notice what these guys are selling, some of them don't have, like, they don't have a training program, but they have affiliate links. Oh, go to this exchange here, and here's my affiliate link, by the way, and go there because they'll give you the best deal. Or use this software, or go use this oscillator, and blah, 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 right? They're all pushing affiliate links, a lot of them, if you notice. So they need traffic. So they're going to come up with these exaggerated titles and this and that to get traffic. And you have to understand, that's a marketing, well, I'm sure you know, but maybe someone who doesn't know, that's a marketing technique, and they need a lot of traffic. They need a lot of views, right? So if you have 100,000 views, a small percentage of them are going to click on your link, and you're going to make money because someone's going to pay, they're going to open up an account at the exchange, and now the exchange is going to send you $50, right? Passive income. Oh yeah, I get to make passive income all day by just referring people to links. Yeah, okay. Anyway, got to watch out for those guys. A lot of fakes out there. So let me see what else we got. And you know what? Something I noticed, there are some professional traders out there that I have some respect for, and they're selling something also, but they tend to be more in line with like the stuff that I'm talking about, and their numbers are low compared to the expert marketers and fakes. It's so interesting how low their numbers are because they're talking about things that the herd does not want to hear. They're talking about reality, whereas a marketer looks to appeal to your emotions in some way. Watch out for that. And here's another observation. Since I'm in rant mode right now, is it me, or do people with blue eyes have this compelling feeling to be a YouTuber? Do you notice a lot of these polished YouTube people that have really nice cameras and blah blah blah, their eyes are blue? Have you noticed that? I'm like, blue eyes are rare. How come there are so many people on YouTube with blue eyes? Well, you can get some contacts and you can put in blue eyes. Do you know blue eyes subconsciously conveys trust? So you're more likely to trust someone with blue eyes. If someone has to put blue eyes on to get your trust, then what else are they lying about? That's what I don't like about the blue eye thing. You know, my eyes are not blue. They're the color of something else. Anyway, so let's see what else we got here. That was my blue eye rant. But notice that. I don't know, is it me or do a lot of these people have blue eyes? Okay, let me see what else I got here. So Joel, okay, cool. Schwartz, all right. 455. Hey, so Aussie dollar, asking about Aussie dollar. I don't get too many Forex requests. That's cool. Now, here's something about Aussie dollar. AUD, USD. Aussie dollar tends to be correlated to the S&P, okay, for whatever reason. It's also a commodity. It's considered a commodity currency because it's very tied to, gold and oil and stuff like that, right? So look at this thing. The Aussie dollar in general, we had a trade. This actually was this. I don't know how this trade worked out. I think it may have stopped out. It may have reached one or two targets. I don't remember. This was a trade of the week, by the way. We sent this out weeks and weeks ago. I think it was around here somewhere. Anyway, the point is, this is a bearish chart. Okay, bearish structure at least. Let's go back here a moment. Hold on a second. Let me erase this over here. And let's go back and look at the structure, right, in general. And here's the thing. So going back, we have this bullish structure, right? Then you have a consolidation. Okay, fine. And then you have this bearish situation correcting the bullish structure. It's almost corrected all of it, if you notice, okay? It's got a little more ways to go. But going back to those old resistances, notice where'd that bounce come from on the Aussie? So that's the thing you have to keep an eye on. So you have two conflicting pieces of information here. You have a recent bearish structure, lower highs and lower lows. You have a resistance that you're at right now, and you have a support nearby, a pretty heavy duty support. Okay, and you got a pretty decent reaction off of that support within recent time. So as far as swing trades go, in this situation, I would be interested in shorts on the Aussie dollar. Now, of course, a short on the Aussie dollar, let's take a look at the dollar index, because that's basically what you're going against here, is the dollar, right? Look at the dollar index. Now, the dollar index has been trying to be strong. We got a lower high recently, from Friday or whatever, and it's hesitating here again today at a potential higher low. If the dollar goes higher, then Aussie dollar should go lower, right? And the dollar, the US dollar, the index is in a position to go higher at the moment. It's at the location for it. Doesn't mean it will. So that supports the short idea, right? So I'd be looking for shorts, swing trade short. You have an inside bar right now. It takes out the low of the inside bar. That would be your sell signal, 72.84. You give it some room. 72.50 maybe. It's wise to give it a little room because you know how noisy these things can be. But this is your resistance right here. The stop doesn't have to be very wide. I mean, you could use a tight stop, 73.16. Give it like 73.30, something like that, because it really shouldn't go up there if the dollar is going to rally again and this thing's going to go lower. That's how I would treat that. Now, you are in a bearish structure, so I would expect it's within reason to test this support again, which is what, 71.56? So you got a couple hundred pips in there, right? So you could probably get away with risking 75 pips, maybe 80 pips, and going for 160, right? That's 2 to 1. So that's within reason. The thing is, it may find support there again. So it would be wise to get out of some and see if it could make the lower low or not. You need the dollar to make a higher high, which it's trying to do, but you know how that goes, right? With the Fed and everything else and all the other nonsense that's going on. So as far as a short idea, I'd be willing to give that a try and see how it goes around that low, lock in some profits. If it can get there, see if it breaks. If it gives the double bottom, then it would be a good long signal. It would be a good long as well in that area, okay, that 71.50 area. Now, let's go to the bond market. I haven't looked at the bond market yet. Look at the bond market, right? This is an important sign for what can unfold over the near term. Higher prices in the bonds mean lower rates. So bonds, once again, are pricing in the inflationary scenario. I'm not surprised that the stock market's all-time highs, blah, blah, blah. The bond market is reflecting lower rates. Let's take a look at the 1 week chart, because that's really all that matters here, not the daily chart when it comes to the bonds. Now look at this. There's really no change over the previous 4 weeks. It hasn't taken out the bullish pin bar from the week before. Not yet. It's trying, right? We have a bullish inside bar today, but this is a weekly candle. We have the whole week to go. So that's not a bad move to start out. Does it take out the previous week's high? Even if it can, look at the bearish pin bar previous to it. Why am I even talking about this? Because when it comes to Forex, you really need to keep an eye on interest rates, right? And the bonds, 10-year note here, 10-year note futures, are a reflection of the interest rates. So it's not, the bonds aren't doing anything. The bonds are obviously waiting for something. And Powell was no help the other day. Really didn't give away anything. He certainly didn't say anything hawkish, meaning, implying rising rates or anything like that. And the market's been rallying ever since that. So something to keep an eye on there. This thing, for that dollar, the Aussie dollar trade to work out, this needs to turn red and it needs to start going lower, right? And that will push the dollar higher because rising rates, right? Lower bond prices mean rising rates, right? And that would be a bearish pressure on everything that's inflationary, like the stock market. Okay, so anyway, just wanted to mention that. I hope you found that helpful. I know the bonds can be very boring to talk about. Trust me, I'm very bored talking about bonds, but they are important to, keep an eye on in the background. All right, so thanks for asking about that. Let me see what else we got here. So that was Aussie dollar. How am I doing with time? Okay, I got a few more minutes. I appreciate everyone's great questions and people sticking it out with me here. Elizabeth, okay, do you suggest shifting to 4-hour chart? That's a very good question when trying to scale in or out. So Elizabeth, to answer your question about 4-hour charts, part of that depends on the instrument. If you're talking about like a 24-hour instrument like Bitcoin or whatever, 4-hour, while it's not horrible, here, let's go to Bitcoin. 4-hour can be a little noisy for those time frames. So what we like to do is we like to look at 8-hour. Okay, like an 8-hour would give you at least some sort of, it'll give you some sort of, what's the word I'm looking for? Granularity, without, while at the same time keeping noise somewhat minimized. A 4-hour can be very noisy, right? For this, it's just a lot more noise. So I would suggest 8-hour if you're doing something like Bitcoin, or even a 12-hour isn't bad either, okay? As opposed to a 4-hour. Now, something that's not a 24-hour market, like stock, for example, I think a 1-hour would be more appropriate than a 4-hour, because you're only going to get 2 candles per day, right? Stocks are only open for 8 hours, so you're only going to get 2 candles per day. At least with an hourly, you get some more granularity, but not too much, okay? Because too much is useless. So anyway, thank you for asking. That's a great question. Let me see. Olga, Uni USD. Let's take a look. I haven't heard from this one in a while. Let's see. So you have this. This looks like it's trying to go for the consolidation breakout, and the breakout looks like it's in progress. So right from the start, nice recent push, okay, bullish. You have this consolidation, right, which is typically a continuation pattern, and you have a breakout. So looks like it's trying to basically follow what the Ethereum lead, because Ethereum looks a little bit more, Ethereum looks better than Bitcoin as far as the breakout goes, and that's a nice strong candle. What you want to see on something like Uni is you need that candle to close like that, okay, first of all. If you're buying this now on that breakout attempt, you can measure your risk from these range lows. So you're not getting the best price. You're hoping for the breakout. $25 basically, right? This thing right now is at 28. So you're looking at least $3 of risk. Max, that's where your stop should go, somewhere around there, maybe slightly lower. And what you need this thing to do is follow through. The next set of candles need to be taking you above this range. Now, keep in mind, this looks great right now, but it's a follower. Uni is not a leader. If Bitcoin fails, which it's hasn't proven itself yet around 50K, and it fails to break out and pulls back to 44K or whatever, no matter how nice this looks, this is going to turn red and go back to the support. That's what they always do, right? So just something to keep in mind with something like this. It's not really doing its own thing. Maybe it's trying to, but I wouldn't rely on something like that. That relationship is too uneven. So if you're going to go for the breakout, you can put your stop where I said, and hope for the best at that point. And if you get the fake out candle, that's where you need to be nimble and to adjust, meaning you have a small loss or something, and you don't want to take the full risk, you can get out at that point and take the loss. Don't go into hope mode. All right, because that's what people do. They buy into it and they oh, it'll come back. I hope it comes back. Oh, I listened to that other fake guru and he told me it was going to come back, and they poison you with this hope, and then this thing breaks the support, right? That's the risk that you're putting yourself into, and there's no reason for that. Take the loss when you have the opportunity to take a small loss. So thanks for asking about Uni. I mean, I generally like it. I would call that as a swing trade, as an aggressive swing trade, depending or betting that Bitcoin will follow through. I mean, that's not a bad situation you got right there. So thanks for asking. Also, SOL. All right, let's take a look. This one was, oh, here we go. Okay, vertical. So something like this is doing its own thing. You can't touch this now. If you didn't take this, like I think we've talked about this. People had asked about this previously. I may have mentioned it around here. I can't remember. But I know we talked about a consolidation breakout or going for that aggressive trade. That's it right there. See this right there? That's the consolidation breakout. You want to see something similar to that, like on Uni. You want to see Bitcoin do a similar thing as well, where it just closes strong and then the next candle gives you this, right? That's what you want to see after you're in it, not the red candle. Now, notice here too, this breakout here, when it broke out of this resistance, notice not one green candle closed. They're all, not one red candle closed. They're all green. That's what you want to see after a breakout, okay, if you take the breakout. Now, that was a risky trade. That could have faked out. Look at it back here, right? This is a fake out right here. So that's what I mean. It could have done the same thing. So you need to know the difference and be prepared. Now, as far as Sol goes, SOL, Solana, you can't touch this, right? Don't touch it up here. You're buying into the highs. You're taking it off someone else's hands who took that a risk earlier. So you want to look for supports, right? So your first support is here, $79.80. Basically, $80 is one support you want to be watching for. And the next support, a more aggressive support, because it hasn't spent much time here, $90, right? How much is this thing right now? It's over $110. It's ridiculous. Stay away from these nonsense coins. But if you want to get involved as a swing trade, at least wait for a support level at minimum. Don't buy into these vertical highs due to the fear of missing out. You're going to get caught at the top. Okay, and even if you don't get caught at the top, let me just show you another example of why buying the highs is such a bad idea. Let's forget where it is right now. And let's say you bought this high instead. Okay, let's say you bought that. And you're like, and then you get the next candle's red. And you're like, oh, that bald guy told me that if the next candle's red, I should get out. Right, so you get out. And then you get an inside bar to go long. And now you look at it in a couple of days. Oh, why did I get out? I should have just stayed in hope mode. It would have been more profitable. Right. In this case, it worked out. But you don't want to get caught in these confusing situations where, you don't bang it out. And the one time you don't bang it out, it really gets hammered. And we know how these things can really get hammered. So that's what you have to focus on, the risk. Don't let a vertical chart distract you with, profits that aren't yours anyway. Right. Basically, the fear of missing out, chasing after profits that aren't yours anyway. All right, so thank you for asking about that one. Great one, because this is another hype one. People have been asking about this one for a couple of weeks. It makes sense as to why. James, let me see what we got here, James. Hold on, just going back to the chart, the chat. Let me see. Where are you, James? Where are you? James, thanks for your videos. From FX Empire. Wow, I'm glad someone watches me on there. Can you check Pound New Zealand from London? Okay. So Pound New Zealand, that's a cross pair. Now, I'm not a big fan of these cross pairs. I know a lot of these Forex guys, they make they like to show these after the fact trades and blah, blah, blah. Here's the thing. Obviously, the pound needs to move faster than New Zealand or whatever for you to get a move out of this. You're in a range. A lot of times these cross pairs are in ranges. One reason I don't like cross pairs too are the spreads are usually very wide, and it makes it very hard to play these things. But as far as range goes, look, you're near a range low, all right? So if you want to do it, if you want to get involved, at least you have an attractive location, at least. You have an inside bar closed, and it's trying to take out the high of that inside bar, right? Today's candle is still fluctuating there, but yesterday's candle closed. So the high of yesterday's candles is 196. If you take out that high, you have a buy signal, right? Near or off of a range low. So you do have an attractive location, and you can measure risk, right? Your risk would have to be defined around 195.99. So you figure like 196 even, maybe give it a little more room, something like that in that area. And you're looking for the middle of the range to be reached, somewhere around here, which is 197.5, 197.75 area, 197.80. That's the area you're looking for, okay? So you want to at least be getting at least 1-to-1. And the idea is, for example, if you put on a couple of mini lots or micro lots or whatever it is that you have, you try to hold on to some to see if you can get to the range high. But when you're in a range like this, look how long it's been range bound. I mean, it goes back a long time, right? A few months there. So don't think you're going to get a breakout to new highs. It's usually a bad idea. If you're getting double or triple what you risked, you've done your job. And really, you know, if you want to try to let some ride, okay, fine. But you should at least get out of most of your position once you've reached, you know, greater than 2-to-1. That's just, as a swing trade, that's just a good habit. All right, so thank you for asking. All right, let me see. I mean, I got so many questions. I'm just talking really slow today. All right, a few more minutes. I want to try to answer some more questions. All right, and again, thanks for watching me from FX Empire. Okay, Joel, if a coin is vertical on daily, if you're going to be involved, should you be looking at a smaller time frame? Okay, good question, Joel. As a day trader, then you'll have some opportunities. I mean, day traders are more appropriate for smaller time frames are more appropriate for day traders because you can get some structures in there. But the thing is, if you don't have a lot of experience, you should not day trade, because the thing is, you won't have the decision-making structure. You won't have the mental structure in your mind to get out if things aren't going the right way. Or what you may do is you may get out of a couple of losing trades and be like, oh, this sucks. I'm just going to hold on because they keep shaking me out. And you don't realize the magnitude of risk that you just assumed when you turn a day trade into a swing trade, right? That's the mistake, the most common mistake that I see. That's why I tell people, if you're new, just don't day trade. Just don't do it. Okay, so as far as swing trades go, smaller time frames aren't going to help you, right? So when something goes vertical, like we just looked at a couple of those, best thing to do is define your support and then wait. It may take days, it may take weeks. So while you're waiting, you go look for something else. There's plenty of charts here, right? People showed plenty of charts where there were some opportunities. You don't have to be focused on just one. So thank you for asking. It's a good question. All right, Shashank, ICP is also garbage coin, like all the... See, Shashank knows. Shashank knows. Don't mess with Shashank. Okay, Tron, speaking of garbage coins, TRX, USD, let's take a look. So, I mean, here's the thing, right? It's altcoin season, right? I based on what the other gurus are saying. Altcoin season, okay. So, here's the thing with Tron. While the party's trying to get going, here, you have some bullish structure, right? This is definitely bullish structure. Tron is a follower. It's not a leader. You have a consolidation, a mini consolidation. This consolidation is a trend continuation pattern. I mean, the structure is definitely bullish, and you're consolidating. So that looks like a long. Now, Tron, of course, we know is a garbage coin. So you're going to need Bitcoin to really do its thing. If this thing breaks out, right, you could have a breakout there. You know, really it should break out here, but that's so risky, right? So you're better off giving it a try here. What is that? Basically just over 91 cents. Maybe give it like 92 cents or something. Give it a little room. What's this price over here? 96, right. Give it a little room, okay? Your risk is going to be defined by the range low. Don't put a daily candle low. You're going to get stopped out. So 81 cents. So you're looking at around 80 cents. That's where your risk is defined. So if you take a trade on something like this, a swing trade, obviously you'll have to use some leverage or a more sizable position to make some money on something like this because of, you know, the price of it. 8 cents here, or just over, what is that? 0.88? Yeah, around just almost 9 cents. If you're buying into that, that's the risk you're looking at. You need that breakout to occur, and you need to justify that risk, right? You need this thing to do something like that. Now, can it do something like that? What's the recent resistance area? Let's take a look. So you're looking at lows over here, 14 cents, that's the whole number. Low, why can't it give me a number there? Let's see. No, that's 10 cents. That low is 10 cents. This one is 10. What's this one here? So you're looking at around 10 cents. Yeah, just over 10 cents. That is your first area. So you need to be able to justify, and it looks like a pretty decent reward risk, right? You're risking, like without using numbers, without talking numbers, you're looking at risking this amount right there to attempt to make this amount. I mean, just look at the size of the movements, okay? So that's that. To make it real simple, I mean, that's what you're looking for, something like that. What you have to realize is these charts don't do most of them are not reliable on their own. So yes, there's a continuation pattern, but that pattern will fail if Bitcoin fails. So that's why you have to always keep an eye on Bitcoin in those situations. But generally, that's not a bad pattern. If that was a stock, I would definitely be interested in a long on something like this. Although breakout trades are not really my style, I would at least agree with it. Okay, so thanks for asking about that one. Let me see. So Gotham, yeah, Poly NYC, yeah, got it. Okay, Gotham, yeah, I spoke for 3 hours on that one. Okay, Isaac, no problem. Andre, cool, I'm good. Maybe check out Sol. Okay, checked it out. If you have time, I was in from 35, was at around 60. Right, so okay, so I went over that one. Nice trade, by the way. Do you think this is just temporary lack of correlation? Well, all these altcoins that do their own thing, yes, I think they're temporary. You know, unless there's something that's really fundamentally driving them. But most of the time, you know, these coins are like lottery tickets. It's not like they're well-run, solid companies that dominate their industries. They're usually just some coin that solves some problem that no one cares about, right? They're just being hyped somehow and somewhere. So treat them like penny stocks, right? They have a temporary run. You make some money in them, great. But you know, you're basically just keep in mind you're gambling with them, and that's okay as long as you know how to manage your risk in those situations. There's nothing wrong with trying to play some of those breakouts and seeing if you want to, you know, get a nice vertical move. But just always make sure you have that lottery ticket mentality. Don't think you're getting into something that's going to be $100 a coin or whatever, you know, by next week because some moron in a chat room told you that. You know what I mean? So thanks for asking. Do you think this is just a okay? Schwartz, Solana has the most hype now. I can imagine. Elizabeth, the rants are totally worth it. I'm a therapist. Oh, okay. Maybe you can market your rants though. What are you, Elizabeth? Are you saying I should sell my rants? I don't know. Thanks from Germany. Really enjoy listening. Oh, I appreciate that, guy. Well, thank you. I appreciate that. Andre, Sol has an amazing blockchain. Right now, it supports approximately 1,500 transactions. Incredible compared to ETH, gas fees. So I'm wondering if it's something related to SOL development activity. So Andre, you know what? So you're talking about some fundamentals there. And yeah, it may sound compelling and all this and all that, but I can tell you, you know, years ago, there were all these alternate coins, right? All these alts to Bitcoin that do it better. They scale better. They solve this problem better. They solve that problem better, blah, 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 blah. And you know what? They all still almost went to zero anyway, right? I mean, look at IOTA and look at some of these other ones, right? All these ridiculous coins. They solve all these problems and they do all this stuff better, but no one cares. You know why? Because Bitcoin was there first. Ethereum was there first, right? And they have like the first comer advantage, whatever you call that. And just like Coke and Pepsi, right? There's lots of other sodas out there, but still Coke and Pepsi dominate the industry because they were there first. So anyway, and there's other sodas that I'm sure are better than Coke or more efficient or maybe more nutritious than Coke or whatever. Okay, I don't know, I don't drink soda, but you understand my point. So don't get wrapped up in those fundamentals. When you're playing that vertical game, when you're playing and there's hype going on, like Schwartz says, there's a lot of hype in it right now. When you're playing that hype game, realize what you're playing is the herd mentality. You're not playing, forget the fundamentals, forget all that other nonsense. You're playing order flow. You're playing people piling in because they don't know any better. And you need to be able to understand when there's no more people piling in so that you can manage your risk, right? That's really the idea. You're playing the herd. So thanks for asking about that. Okay, XX, hey, haven't seen you in a while. Good to see you. Do you ever look at depth, meaning it doesn't make sense to me. I see a lot of sell orders and few buy orders. Okay, good question. And still prices going up. Have to look at ETH now, for example. Okay, very good question. So you're talking about like the like on Coinbase Pro, the order book, right? Which again, I criticize those order books a lot because they're nonsense. The reason why they are is they're showing you orders that are being matched. They're showing you limit orders that are changing and all this other flickering stuff going on, right? So it looks like it's meaningful information, but it's useless information. You know why? Because you can't see who those orders are from. You know, you can have an algorithm that's selling $1 million worth of Bitcoin one increment at a time, right? One fraction of a coin at a time. And you don't know that this $1 million is being sold one increment at a time because that's what the robot can do. And, you know, so there's you may be in front of $1 million sell order or whatever, some big number, and they're giving into little tiny bits and pieces. So how can you read that? You can't. You know what you need? You need to be able to see who the account, you know, whenever you see orders being matched, you need to see who those accounts belong to, what positions they have, and where their orders are. You know, where are their limit orders spread out, and how active are they placing market orders? That's what you need to see. So, for example, if you could see an institutional account, right? Let's say there's $10 million in the account or something, right? Some big number. And they have a large portion of Bitcoin, and they're long. And you can see that they're net long from a very low price. You know they're going to be a strong hand, right? Now, if you see that they've put a big sell order or series of sell orders that are being incrementally placed around, do you want to be buying into that? I wouldn't be. What if it was Elon Musk's account and we could see that he's actually selling Bitcoin? What if we could see that? That would be useful information. Otherwise, these order books, right? Binance, Coinbase Pro, they're useless. They are completely useless. They give you no information that provides any type of advantage. But what they do is stimulate you or confuse you or fool you into thinking that you have some kind of information here. Oh, look, I saw a lot of sell orders go off. Doesn't mean anything. Bitcoin's going higher, right? The sell orders that you see, they could be spoofed. They could be there and then they disappear and they come back and they disappear. They have robots that do that too, right? Just to shake you out of your coins. People that think that they're looking at something. So don't be fooled by that. All that stuff is nonsense and it's useless. If there was any value to it, then they wouldn't be offering it to you for free. But Coinbase Pro and Binance, they make money off of fees, right? So they want you to trade just like a slot machine. They put all these bells and whistles and all this stimulation in front of your eyes, just like a slot machine. So, you know, a slot machine robs you, right? But they make it fun. They have animations, they have this, they have that, plus the hope of winning. So you're happy to feed that slot machine and lose. No one wins. No one. There's no such thing as a professional slot machine player, right? But if a slot machine was this boring machine where you just fed money in and there was no stimulation, just a boring, there's an input and an output. You feed money in and you hope something comes out. No one would play slot machines. What is it with these slot machines, right? So Binance is the same thing, or Coinbase Pro with that order flow nonsense. It's the same thing. It's just a fancy slot machine. They're probably not going to like if I say that, but you know what? That's the way it is. Okay, anyway, thanks for asking about that. I could rant about that forever. Shorts. E-gold is way better, but not being so hyped. Wouldn't jump into it. Okay. Yeah, wouldn't jump into Solana right now. Right, well, good idea. It's vertical. It's like buying the Nasdaq right now. I mean, who would do that? Someone is obviously doing it, but man, you really have to be like plugged into the herd and just reacting and following when you're doing those situations. I mean, that's when you get more experience in this game, it becomes hard to believe in these moves sometimes. Now, look, if I was mindless and dumb, I could have bought earlier today and I'd be up whatever, right? Because the whole day the Nasdaq went up. But I know the risk, and I'm not willing to take the risk. And do you know how I know the risk is? Because I've lost a lot of money a lot of times doing things like that. So I know it's a bad idea, although it might work this one time. I don't know if it's going to work, though, this one time. I can't rely on things that just work one time. So that's what happens. Okay, so thanks for asking. Olga, do you think if you have time, Dot? Okay, sure, we can take a look at Dot. Let me see how I'm doing here with time. Speaking of time, yeah, I got to wrap this up here in just a few minutes, a couple of minutes. I'll answer Dot, and let me see what else I got. Okay, hey Wedge, no problem. It's good to see you. Thanks for stopping by. You can always catch up on the stream. All right, cool. Okay, no problem. All right, so I'm gonna wrap it up with Dot, and then we'll go from there. Okay, so again, for those of you wondering why I'm not on TradingView, I couldn't connect on TradingView today. I got to figure out why. Here's Dot. Now Dot looks very similar to that situation what we have in Tron, right? Consolidation breakout. Look at this. So look at the structure beforehand. I could see why all the fake gurus are calling this alt season again. I mean, so this is when Bitcoin rallied right here, okay, off of the 30K low. Now, since then, Bitcoin has been somewhat consolidating near 50K. Notice these coins, like Dot, are consolidating as well, and they're all trying to break out along with Ethereum. Looks very similar to Ethereum, okay? So they're playing follow the leader, okay, that's fine. So in a situation like this, you have a buy signal, which is basically in play now. It's been in play since it took out yesterday's high. But you have this little breakout right here as well. So the question is, are you willing to take risk? Are you willing to risk that this thing follows through on the breakout? You're going to need Bitcoin to follow through. If Bitcoin fails, then no matter how nice this thing looks, just like the other ones we looked at, very similar to this, no matter how nice it looks, it will fail too. So something to keep in mind. Now, the risk on something like this, if you buy this right now, it's 27.34. You're going to define the risk. You can use this high or low, but that's a good chance to get stopped out there because you're still inside of this range. So the better place to put the stop would be around 22.86, around 22.50 area. Okay, so you're looking at about 5 points, of risk, which means you need to make 5 points, right, to justify that risk. Where's the first resistance on this thing, right? If you clear that, if you can clear this consolidation, and again, like you're going to need Bitcoin to do that as well. Your first resistance is around there. So what price is that? 32.5, 33.5. So it looks like it's within reason to get 1-to-1 at least if you can get the breakout here. So you have this structure. It's all set up. It's all there. You just have to be willing to take that 5-point risk. You need Bitcoin to agree with you and follow through, and you need to have your targets set somewhere to at least justify it 1-to-1, and then perhaps you let some ride to see if you can get more than that if the market wants to continue. But again, with all this, we're looking at this setup and it looks good right now and this and that, and it may break out. It may try to break out and fail. So you need to be prepared to adjust if it fails, right? And Bitcoin fails. We talked about that before. And also, you need to realize that no matter how good things look right now, Bitcoin is in a broad wave 4. Okay, now let's just take a look at that. I used to emphasize that more, but it seems to confuse people. This situation on Bitcoin, right? Ever since we made that 64K peak, right? We went into this wave 4. Now people seem to think wave 4 is only 3 waves, but it's not. Wave 4 looks something like what gold is doing. This is a wave 4. Okay, look at this nasty pattern that's basically that's taken place over a year. This is over a year's worth of data here, okay? From that August peak back here to where it is now. That is what a wave 4 looks like. It's a mess. There's no clear trend, right? It's just kind of all over the place. You could make money in that, but you need to put your expectations, you need to make sure that they're in check. You can't sit there and say, well, I got the bottom and now Bitcoin's going to 100,000 like that fake guy told me. You can't do that. So understand we're in a wave 4 until we're not in one. So going back to something like Dot is going to be affected by that. So if Bitcoin's in a wave 4, how far is this thing going to go? So if you can get your 1-to-1 or 2-to-1 on your swing trade, you've done your job. All I'm saying here is expectations, okay? If it fails somewhere along the way quickly, you need to be able to adjust because, again, this is not a full-blown bullish trend. We're in a wave 4. And it can look really nice, but meanwhile, you're just in the middle of the consolidation, which means it's just as likely to fail, all right, probability-wise. That's what you need to keep in the back of your mind. So it doesn't mean avoid the trade. It just means understand what potential you're looking at. Be prepared to take a small loss if you have to, and have your risk clearly defined. A lot of these fools out there, they go into this, they just throw some money in, and yeah, it'll work out. We're in alt season again, right? And they watch their YouTube videos, and they just believe what they're told. No regard for risk, all right? And then when things go the wrong way, then they're at the mercy of the market. And then they go complain to their fake guru, and the fake guru, well, you know, the market, it's the market. I have no control over the market. I mean, hey, you should know how to take risk, blah, blah, not my fault, it's your fault. So anyway, that's really like the point there. And again, something like DOT is not a leader, it's a follower. So you're depending on Bitcoin, which another point is don't overload on these things, right? We looked, Ethereum looks like this, Uni looks like this, we have DOT, Tron looks like this. So you have a couple of choices here. Don't take them all. It's all the same trade, all right? So I'm going to leave you with that. Here, back to Bitcoin here. I mean, look, Bitcoin's been consolidating too. It can go either way. Theoretically, we're looking at higher lows and higher highs. So the structure favors a bullish breakout, but that doesn't mean we will get one, and that doesn't mean it will follow through. That's the important thing that you need to understand. We may get, you know, some news may come out or something, or maybe NFP has an effect on this thing. I don't know. Something may come out that the market doesn't like, and next thing you know, it's breaking supports. So you always have to respect the risk while still acknowledging the potential of the long setup that's been developing here, okay? So, I mean, look, Bitcoin was, oh, this is 12 hour. Let's go back to 1440. I mean, 12 hour, daily chart, it's basically, they're very close. So I was looking at 12-hour charts this whole time, and you can still use those for the kind of analysis that we were doing. I mean, we're getting a green candle on a 12-hour. It's a pin bar on the daily. It's the same thing. Anyway, all right, so thanks for asking about that. I'm going to wrap this up now. Let me see how we're doing time. Yeah, I'm going to wrap this up. All right, so let me just read these here, okay? If you want more viewers, you got to make clickbait thumbnails with lots of rockets. And you know what, Janice? Yeah, I've been actually researching that stuff. And yeah, I just don't have the time to make those ridiculous thumbnails. But that is a strategy. You know, making those ridiculous. I can't make ridiculous ones, though. I'd have to make more realistic ones. I probably won't get any clicks if I do those fancier thumbnails. But I understand what you're talking about, and that is a strategy that they use. All right, anyway. So thank you so much. Okay, cool, everyone. So I'm going to leave you with that. If you have any algos or robots do better trading, then where can I buy some? Well, here's the thing. There are retail algos, and then there are professional algos, right, that are run by market making firms. You can't get a professional algo. First of all, professional robots don't play the same game retail traders make. Professional robots aren't sitting there looking at charts and looking at oscillators and all that other nonsense. A professional robot is often competing with speed and size. They're moving big positions very quickly through the order book and they're trying to be first on the bid or on the offer. It's a completely different game. So you have to go to MIT, you have to get a PhD after 5 years or whatever, you get hired at a professional market making firm, you're making $300,000 a year to make these algos that basically manage positions and size, right? None of these guys can trade on their own, by the way, right? They have to work for a firm. So that must tell you something. A firm with a lot of money, a lot of capital, and they're moving money around like that. Retail robots are nothing more than robots that gamble like anything else. They're trying to take advantage of some kind of pattern, right, or some kind of crossover or whatever, and it works until it doesn't work, right? So if you have a nice strong trend like the Nasdaq, it'll work for a little while. When the Nasdaq goes into a range, it'll stop working, and I'm losing money in this thing, and then you have to buy another robot. So again, the outcome is still the same, random. Anyway, so I hope that answers your question there. Thanks for asking. Very interesting stuff. All right, and the shocked fee, right? Andre, the shock. You ever see these guys? They're like this. They're like this on the thumbnail. Bitcoin going to 100,000. You ever see that? It's like, and they have blue eyes. Imagine my eyes are blue. Okay. Anyway, right. So I'm gonna go click on that so I can watch them and talk about Bitcoin going to 100,000. I know the people here are smarter than that. I know the people here don't get lured by that nonsense. That's why you're watching me. But man, there are a lot of people that do get lured by that. I mean, they got 100,000 views, some of these people. It's ridiculous. Anyway, well, look, they're trying to run a business. I understand. They're doing a lot better than me. Okay. So, okay, cool. No problem. Oh, David from Spain, welcome. Mucho gusto. Or mucho gusto, if I pronounce that right. Spain has that accent is a little different in Spain. Okay, okay, cool. Right, BTC to 500,000 believers. You should enable the top chat so we can pay a few dollars. Like, oh, I appreciate that, guy. You know, I see all these people basically with the donations. I don't know. I mean, that would be nice because I spend a lot of time at this and that and whatever. But, you know, I don't know. I'm not here to beg like these guys do. So maybe it's something I need to get over. I don't know. It'd be nice to get some money for whatever. But, you know, I trade. So I don't know. Anyway, all right, cool. I got to wrap this up, everyone. So I want to thank you all for spending some time with me here today and all your great questions. It was a good session, again, because I didn't have TradingView to handle, so I was able to spend all my time here on this chat, which is nice. I usually do that on Thursdays. But again, I want to thank you all for taking a moment here with me to hear that. I hope you found this useful for the next few days as far as price action goes, and you have some better ideas of levels and how to manage your risk. If you have any questions, hitting the yeah, there's a couple of them in there, Wedge. I don't know. I didn't rant too hard in the beginning. If you have any questions or whatever, there's links in the descriptive portion of the video here with our website and stuff like that. As you can see, I'm getting tired. I've been talking too long. If you come to our website and you sign up, yeah, we have a free trial, but just keep in mind, in this environment, the trade ideas have been a lot less. We don't force trades. So I don't want you to get into something and then be like, oh, these guys don't call any trades. This is not a high trade. This is not a high frequency environment. So just maybe better to wait a little while, you know, wait for volume to pick up and stuff like that before doing something like that. I don't want you to come in and get the wrong impression. Okay, but you know, we are in there, we put observations and things like that, but there's not lots of trades. And I know people want lots of trades. So we don't force trades. We don't make them up just to make them up. A lot of people do that, you know, or whatever. And we're focused on swing trades and more of like position trade, inventory management type of stuff. And sometimes it requires a lot of waiting and a lot of patience. Okay. So anyway, no problem. Cool. All right, everyone. So wherever you are in the world, I want to thank you all very much, like I said, for taking the time to watch and ask your questions. And again, find me throughout the week. I'll do this again on Thursday and, you know, whatever. We have our thing on Wednesday, so we'll see how that goes. All right. So enjoy the rest of your day, everyone. And thank you very much for watching.